How can the Indian government broaden tax compliance and increase revenue? Broadening tax compliance and increasing revenue in India requires a multi-pronged approach. Here are some key strategies. Expanding the tax base. Reducing the exemption limit. Many individuals file returns but have zero taxable income. Gradually lowering exemptions or introducing a minimal tax for higher earners can help. Bringing more professionals and SMEs under TaxNet. Many self-employed professionals and small businesses underreport income. Strengthening digital payment tracking and incentivizing compliance can improve collections. Simplifying the tax system. Reducing complexity. A straightforward tax code with minimal exemptions and deductions can encourage compliance. Facilitating easier filing. Enhancing online tax filing systems, providing AI-based tax assistance, and simplifying GST compliance can reduce the burden. Strengthening enforcement. AI-based tax monitoring. Using AI and big data to track high-value transactions, property ownership, and luxury spending to identify tax evaders. Stronger penalties for non-compliance. Strict action against habitual non-filers and a crackdown on shell companies can deter tax evasion. Encouraging voluntary compliance. Lower tax rates with wider coverage. A balanced approach where rates are lowered but more people pay taxes can increase overall revenue. Tax incentives for compliance. Rewarding honest taxpayers with benefits like faster refunds, priority government services, or interest-free installment plans can boost compliance. 5. Promoting digital transactions, discouraging cash transactions. Implementing higher taxes on large cash transactions and rewarding digital payments can reduce unaccounted income. Expanding GST to more sectors, including more businesses and sectors under GST, especially the informal economy, will increase revenue. 6. Targeting black money and offshore accounts. Strict monitoring of high-value transactions. Linking bank accounts, property purchases, and luxury spending with tax IDs can help identify undeclared income. International cooperation. Strengthening treaties with foreign governments to track offshore tax evasion. Raising awareness and trust. Public education campaigns, informing citizens about how taxes benefit them. Infrastructure, healthcare, education can improve compliance. Transparent tax utilization. If people see better public services from taxes, they will be more willing to contribute. Implementing these measures can significantly boost India's tax compliance and revenue while ensuring fairness in the system. How can Indian government provide tax incentives for compliance? The Indian government can encourage tax compliance by offering various tax incentives that reward honest taxpayers. Here are some effective ways to do this. 1. Direct financial benefits. Tax rebates for consistent filers. Provide a small rebate or reduction in tax rates for individuals and businesses that file tax returns on time for a specified number of years. Lower audit probability. Taxpayers with a clean record for 5+ years could be exempt from random tax audits, reducing compliance burdens. Higher interest on refunds. Offer higher interest rates on tax refunds for taxpayers who file returns early. 2. Priority government services. Faster loan approvals. Tax-compliant individuals could get priority in availing government-backed loans, e.g. home loans, MSME loans. Express passport and visa processing, providing faster processing for tax-compliant individuals as an incentive. Health and insurance benefits. Discounts on government health insurance, e.g. Ayushman Bharat, for regular taxpayers. 3. Consumption-based incentives. GST credit for individuals. Allow a portion of GST paid on high-value purchases, e.g. cars, electronics, to be credited against income tax for salaried individuals. Tax discounts on digital payments. Encourage tax compliance by providing rebates to individuals who make over 80% of their payments digitally. 4. Incentives for small businesses and startups. Lower tax rates for GST-compliant MSMEs. Offer reduced corporate tax rates for MSMEs that file taxes consistently. Tax holidays for new filers. Small businesses filing taxes for the first time could get a one-time exemption or lower tax rates for the initial years. Instant depreciation on digital transactions. Businesses accepting 100% digital payments could claim higher depreciation benefits. 5. Social recognition and non-monetary incentives. Honest taxpayer awards. Recognizing top taxpayers at the state and district levels through public ceremonies. Special status cards, providing a privileged compliant taxpayer card for ease of transactions with government departments. These incentives can improve compliance by making taxation more rewarding and encouraging voluntary participation. How can Indian government bring more professionals and SMEs under tax net? Bringing more professionals and small and medium enterprises, SMEs, under the tax net is crucial for increasing government revenue and ensuring a fair tax system. Here's how the Indian government can achieve this. Simplifying tax compliance. Presumptive taxation expansion. Extend the presumptive taxation scheme, PTS, to more professionals and SMEs, allowing them to pay tax based on a percentage of their turnover instead of complex calculations. Single window compliance system. Create an easy-to-use, mobile-friendly portal for tax filing, GST compliance, and business registration in one place. Lower corporate tax for first-time filers. Offer reduced corporate tax rates for newly registered businesses that file returns regularly. Strengthening tax enforcement, AI-driven tracking. Use AI and big data to analyze bank transactions, digital payments, and luxury purchases to identify potential non-filers. Linking GST, PAN, and Aadhaar. Ensure all business transactions are linked to tax databases for better tracking. Stronger penalties for non-filers. Gradually increase penalties for SMEs and professionals who do not file taxes while offering amnesty schemes for first-time compliance. Promoting digital transactions and tax credits. Tax rebates on digital transactions. Offer tax discounts for SMEs that conduct at least 80% of their transactions digitally to reduce cash-based tax evasion. GST refunds for compliant SMEs. Fast-track GST refunds and reduce compliance requirements for consistently tax-compliant businesses. Incentivizing e-invoicing. Make e-invoicing mandatory for more businesses and provide tax credits for SMEs that adopt it early. Encouraging voluntary tax compliance, tax benefits for first-time filers. Offer a one-time tax exemption or discount for SMEs and professionals filing their first tax return. Priority government contracts. Ensure only tax-compliant businesses get access to government tenders and subsidies. Recognition and certification. Introduce an honest business certificate for compliant SMEs, improving their credibility with banks and customers. 5. Awareness and education programs. Workshops and helpline support. Organize statewide tax awareness campaigns to educate professionals and small businesses about the benefits of tax compliance. Social media and influencer campaigns. Leverage digital platforms to promote the benefits of filing taxes, especially among young entrepreneurs. Partnering with industry associations. Collaborate with chambers of commerce, CA firms, and MSME associations to guide businesses in tax compliance. By simplifying compliance, enforcing tax laws, offering digital incentives, and raising awareness, the government can significantly increase the number of professionals and SMEs under the tax net. How can Indian government strengthening enforcement? Strengthening tax enforcement is essential for improving compliance and increasing government revenue. The Indian government can take the following steps. Leveraging technology for tax monitoring. AI and big data for tax evasion detection. Use AI-driven analytics to track high-value transactions, foreign remittances, property purchases, and luxury spending. Cross-check PAN, Aadhaar, GST, and banking data to identify inconsistencies in tax filings. Real-time data sharing across departments. Integrate income tax, GST, customs, and RBI databases to track potential tax evasion cases. Monitor social media and digital payment trails for high-spending individuals who underreport income. Facial recognition and biometric verification. Use biometric-based authentication to prevent fake PAN, Aadhaar-linked tax evasion schemes. Strengthening audit and investigation. Increase frequency of random audits. Conduct more randomized AI-selected audits to detect tax fraud. Focus on businesses with suspiciously low tax-to-revenue ratios. Special tax enforcement squads. Form specialized investigation teams to track black money, offshore accounts, and benami properties. Strengthen anti-money laundering (AML) laws to target shell companies. GST compliance crackdown. Monitor businesses that frequently claim fake input tax credits (ITC) or underreport sales. Increase surprise inspections in sectors prone to tax evasion. Real estate, gold, wholesale trade, etc. Stricter penalties for tax evasion. Heavier fines and jail terms for repeat offenders. Increase fines and introduce mandatory jail sentences for habitual tax evaders. Blacklist tax evaders from government benefits. restrict loan approvals, subsidies, and government contracts for businesses or individuals caught evading taxes. Public naming and shaming of large tax defaulters. Publish names of major tax defaulters to discourage evasion. Encouraging whistleblowing and informants. Whistleblower reward system. Offer monetary rewards 5 to 10% of recovered tax for informants who report major tax evasion. Anonymous reporting platform. Create a secure online tax fraud reporting system to allow citizens to report tax violations anonymously. Strengthening international cooperation. Enhance cooperation with foreign tax authorities under agreements like FATCA and CRS. Use data from Swiss banks, Mauritius, UAE, and Singapore to track undeclared foreign assets. Strengthen laws to seize foreign assets of tax evaders who flee India. Enhancing compliance through fear and incentives. Tax compliance ratings for businesses and individuals. Introduce a taxpayer credit score system where compliant taxpayers get faster refunds, loans, and clearances. AI-based predictive tax enforcement. Use AI to predict industries and regions prone to tax evasion and target them proactively. By combining technology, stricter enforcement, better data sharing, and international cooperation, India can significantly reduce tax evasion and improve compliance. Discouraging cash transactions. Since cash transactions contribute to tax evasion, the Indian government can take the following steps to promote digital payments. A. Tax incentives for digital transactions. Lower GST for digital payments. Businesses that conduct 80% plus transactions digitally can get a 1 to 2% GST reduction. Tax deductions for individuals. Provide income tax deductions for individuals who use digital payments for major purchases like real estate, gold, and luxury goods. B. Restrictions and penalties on large cash transactions. Lower the cash transaction limit. Reduce the 2 lakh limit for cash transactions under Section 269 ST of the IT Act to 1 lakh. Higher taxes on large cash withdrawals. Increase TDS, tax deducted at source, on cash withdrawals above a certain threshold. Ban cash payments for high-value purchases. Prohibit cash payments for property, jewelry, automobiles, and luxury goods. C. Expanding digital payment infrastructure. Mandate UPI and digital payments for small businesses. Require all businesses with a turnover above 10 lakh to accept UPI, card, or mobile wallet payments. Subsidies for digital POS machines. Offer subsidized POS point-of-sale machines to small retailers and MSMEs to encourage digital adoption. D. Crackdown on cash-based black economy. AI-based cash transaction monitoring. Use AI and big data to track high-value cash deposits, property purchases, and hawala transactions. Strict action against Benami transactions. Strengthen enforcement of Benami transactions, Prohibition Act, to prevent money laundering. Expanding GST to more sectors. Some industries still operate outside GST, leading to revenue loss. The government can bring them under GST through these measures, bringing exempt sectors under GST. Petroleum products. Currently, petrol, diesel, and natural gas are outside GST. Bringing them under GST with a special rate will increase transparency and reduce tax cascading. Electricity and real estate. Introduce GST on electricity consumption and under construction properties to prevent underreporting of transactions. Tobacco and alcohol. Move alcohol and tobacco products under GST while keeping state excise duties to ensure better compliance. Expanding GST to informal sectors. Textiles and handicrafts. Many textile and handicraft businesses remain unregistered under GST. Offering low GST rates, 1 to 2%, can bring them into the tax net. Freelancers and digital economy. Make GST compulsory for online freelancers, influencers, and digital content creators earning above a certain limit. Strengthening GST compliance. Compulsory e-invoicing. Extend e-invoicing to all businesses with a turnover above 5 lakh to track transactions. Tighten input tax credit ITC rules. Prevent fake GST claims by requiring real-time invoice matching before allowing ITC refunds. Linking GST with income tax. Automatically cross-check GST filings with income tax returns to detect underreporting. By discouraging cash transactions and expanding GST coverage, India can boost tax compliance, increase revenue, and create a fairer tax system. How can Indian government target black money and offshore accounts? Targeting black money and offshore accounts is crucial for increasing tax compliance and reducing illegal wealth accumulation. The Indian government can adopt a multi-pronged strategy that includes stricter laws, international cooperation, and technology-driven enforcement. Strengthening domestic enforcement. enhancing surveillance and tracking. Use AI to analyze bank transactions, luxury purchases, property deals, and foreign remittances to detect unreported wealth. Cross-check IT returns, GST filings, and digital payment records to identify discrepancies. High-value transaction reporting. Lower the limit for reporting cash deposits and property transactions from 50 lakh to 25 lakh. Make gold and real estate transactions above 10 lakh subject to mandatory reporting. Crack down on Hawala networks. Strengthen FEMA, Foreign Exchange Management Act, enforcement to detect illegal money transfers. Use AI-based pattern analysis to track suspicious fund movements. Stricter laws and penalties. Faster confiscation of Benami properties. Amend the Benami Transactions Prohibition Act to allow faster seizure of illegal assets. Increase jail terms for Benami property holders from 7 to 15 years. Tighter real estate and gold regulations. Make Aadhaar-PAN linkage mandatory for all real estate and gold purchases above 5 lakh. Increase TDS, tax deducted at source, on high-value property transactions. Cracking down on offshore accounts and shell companies. Strengthening international cooperation. Expanding FATCA and CRS agreements. Work closely with the US, UK, Switzerland, EU, and Singapore to track undisclosed foreign assets. Use automatic exchange of information, AEOI, under the Common Reporting Standard, CRS, to get real-time updates on Indian-owned foreign bank accounts. Fast-tracking tax treaties and extraditions. Strengthen bilateral treaties with tax havens, Mauritius, Cayman Islands, Panama, etc., for faster access to account details. Seek extradition of tax offenders who have fled India. Cracking down on shell companies and fake directors. AI-driven shell company detection. Use AI to scan corporate registries and detect companies with fake directors or unusual financial activity. Link company registration with Aadhaar and PAN to prevent fake identities. Stronger KYC norms for foreign investments. Mandate detailed disclosures for FDI investments coming from tax havens. Increase scrutiny of foreign direct investments, FDI, from offshore entities linked to Indian citizens. Encouraging voluntary disclosure and whistleblower support. Black money amnesty schemes. Strict but time-limited amnesty. Offer a one-time voluntary disclosure scheme with a 50% penalty to recover hidden wealth. Ensure public scrutiny to prevent repeat offenders from misusing such schemes. Rewarding whistleblowers. Introduce a tax informant reward program that offers 5 to 10% of recovered black money to whistleblowers. Provide anonymous reporting platforms for citizens to report illegal wealth holdings, leveraging technology for real-time enforcement. Blockchain-based asset tracking. Use blockchain technology to track real estate ownership and prevent fraudulent transactions. AI-powered tax profiling. Develop AI-powered risk assessment models to detect individuals likely to be hiding offshore wealth. By combining advanced technology, international cooperation, strict enforcement, and whistleblower incentives, India can effectively crack down on black money and undisclosed offshore accounts.